Well, folks, we are coming off a historic first quarter in the stock market with indices straight up, some of the best rallies that we've seen in a one-quarter period since 2019. Sam Bankman-Fried's finally going to prison for 25 years. Even with good behavior, that sucker's going away probably for the extent of half a 30-year mortgage. Bye! So, what do we have to analyze in terms of the near-term future? Well, number one, markets a little excited. In fact, if we look at the greed and fear index, we can see we're at a 70 now on greed. We've moved up a notch. We're at extreme greed on market momentum, stock price strength, and finally, market breadth. Now, market breadth is not like stinky meat breath. Instead, it's actually a way of saying, hey, how many stocks are going up versus how many stocks are going down. And one of the things that we usually see towards the later period in a cycle, like what we saw last summer over here, take a look at this. We saw breadth nicely above 1,500 in the final days of the July 2023 stock market rally. Really, the July rally started petering out around July 19th. And it really started slipping and sliding going into August and then through September and October. We had about a 3-month downtrend right until about November. It was really around November 1st that we started seeing stocks actually rise again. And this is when we noticed that these indices, for example, stock price strength here, for example, highs and lows, you notice we're at the most negative level at the end of that October sell-off. So we went from really these levels of extreme greed to relatively low levels, which are generally associated with levels of extreme fear at the end of October. People thought, that's it, this is the end. Now, of course, since then, we've had fantastic inflation reads that have suggested, hey, maybe inflation is indeed transitory. But that's where the next big catalyst comes in. Is it truly transitory? Following Q1 and Q data, we've had some issues. In fact, one of the easiest ways, in my opinion, to take a peek at this is looking at the New York Federal Reserve multivariate core inflation trend. Multivariate core is a big deal because it tracks in various different decomps here exactly what's going on with the different forms of inflation based on PCE. Now, that is inspired by the CPI, which we understand. A lot of people call this the CPI. But what's not good is we're starting to see this multivariate core trend accelerating again. Let's go ahead and disable all of the other lines. Let's just look at goods here. Goods fell into deflation, actually negative pricing, in the second half of last year. We saw negative pricing begin in June, continue in July. September we were negative, October negative, November negative, December negative. All of a sudden in January we're positive again. But we're nearly indistinguishable from flat at positive 0.02%. But the point is, goods inflation starting to rotate up again. Notice what it was before the pandemic. It was usually plus or minus 0. So we're very much in line with before and after, or before the pandemic here for goods. What about housing? Yeah, housing. We did have that delicious lapping, but unfortunately, housing is finally moving up again, which is actually what we don't want to see. We're at the highest level of housing inflation that we've seen since May of 2023, which is about 10 months ago. Not great. In addition to that, we have services X housing, and the latest data once again indicating an acceleration. So we have all three different components of inflation that Federal Reserve Chairperson Jerome Powell pays attention to specifically, all telling us that we're facing an acceleration. This might explain why this morning, when we go to ehack.com, you'll notice that I broke down something very important here. First thing I broke down here at the top is that warrants are due for the househack. If you invested in the round ending March 2023, those warrants are due April 8th, so we're within about a couple weeks here of that time frame expiring. Share certifications and our full audit will be out by April 30th. We are including the share certifications in the full audit. That's why we're pushing it back 30 days. So we have the audit complete as well, which will be great. Fully audited financials and shares, which is fantastic. We've got, obviously, our Millionaire Symposium event, June 21st to 23rd, and the current househack fundraise live at househack.com/2024, and that is ending June 30th. You could read the PPM there. But what's important here under morning news is what Mr. Waller, President Waller, just told us about his opinions regarding interest rates, and I want to compare that to what markets are doing. So Mr. Waller is of the impression that, wait a second here, maybe we're going a little too fast. Maybe we should slow down and evaluate the direction that inflation is going. In fact, Mr. Waller argues the following: progress in inflation has slowed. I see no rush to lowering the target rate. We should delay or reduce the number of cuts this year. Retail sales and some indicators have suggested softening demand or a declining in inflation expectations, like this morning's inflation expectation read that came in slightly soft, quote, but the evidence for a significant slowdown is sparse, and therefore the risk of waiting a little longer is significantly lower than the risk of cutting too soon and inflation rebounding. Now, if inflation were not rebounding the way it is here, maybe this wouldn't be a big problem, but this is at least starting to concern some Fed members. Now, Jerome Powell says, hey, you know what? The first half of the year usually has more inflation than the second half of the year. But, J-Pow, look at January 2023 to June of 2023. Our year-over-year numbers collapsed here, and I understand that's a year-over-year comparison. But it's not good that last first half, our inflation numbers were collapsing. Now, our first half is starting with them actually rising. And now, tomorrow we are going to get PCE data. The stock market will be closed tomorrow, which is unfortunate because I'd really like to cover it. Just like I cover all my trade alerts, whether they're longs or they're shorts or they're short-term trades, hedges. I make it very clear exactly what I'm doing. I send all my buy-sell alerts to everybody in the Stocks and Psychology of Money group. You can get that link down below. A lot of people, by the way, bundling it with the Zero to Millionaire Real Estate Investing course. Really great course for getting started in real estate. Which we know is hard right now, but people are getting educated. So we have PCE coming out tomorrow. The stock market will be closed. PCE month over month is expected to be 0.4. That's an acceleration from the 0.3 prior. Now keep in mind, that is data from February. So we're still not getting March data. We won't actually be getting a March data for a little bit longer. In fact, if you go to ehack.com, you'll see it broken down right here. I wrote, the next CPI data for March comes out April 10th. That's 2 days after the househack warrants expire. The next Fed meeting is May 1st, so you're really only getting one report between now and then. Waller wants to see at least 2 reports of better inflation data before really making a decision here. The next CPI report for April comes out May 15th, which is after the next Fed meeting. And then the next CPI report thereafter comes out June 12th, which is actually the same day as the next Fed meeting, and just about a week before our Millionaire Symposium event. So make sure to check that out. But what's important here is, will this trend continue? Well, almost certainly once we get the PCE data for February, we're going to see this multivariate trend move up again. But the question is, does the stock market care? Well, that's a very interesting question, because if you look at the Russell 2000 via ticker IWN, you could see that we had a 3-month sell-off that began July 31st, and we had a 3-month sell-off all the way down to a retracement level here, which ended right around November 1st. So all of Q3 was a sell-off in the Russell 2000 small caps. And you notice that most of the gains in the Russell actually occurred between June and July. So most of the gains occurred in June and July. This is interesting. What were some of the last stocks to really rally going into June and July? Well, let's get off of the average candlesticks and go to the normal candlesticks here. Let's go to June and July, and let's see what we have here. Oh, Matterport gets June 15th, an 11.7% day. Here's a 6% day, 3% day, and we had a couple downs of between 1 and 2% on other days. Actually, you had a 7% down right here shortly after that 11.6%. So you can see that volatility. But look at that final surge going into July. 2.3%, 3.2%, 9%, 4.6% onto July 12th. And that is really when we started then seeing that downtrend again and sort of that bleed out, which that bleed out has really been continuing until roughly today. Today and yesterday, the stock is doing very, very well. In fact, go back to the average candlesticks and just look at the last 2 days here. We had an over 7% day yesterday, 7% pre-market, and another 7% on top of that now. Some folks are using stocks like this, whether it's Open Door or Matterport, as essentially a proxy for saying the last part of the risk-on rally has arrived. But anyway, the question that folks have now is, do we chase returns like what you're seeing in a Restoration Hardware? I opened a position, and my exposure to Restoration Hardware, about maybe 3 or 4 weeks ago, mostly because I think furniture is at the bottom of the furniture recession. I think it's up from here. But it does beg the question, when you see a 17 to 18% move on Restoration Hardware, with all you really having being an optimistic CEO in the earnings calls, numbers not actually being that great for the current quarter's earnings release, and instead a lot of optimism being painted for the rest of the year, the response of the market is somewhat suggesting markets are ready for what appear to be beat down, discounted opportunities with hope, because markets are looking for the next thing to buy. It doesn't seem like the answer for markets, at least in the last few days, is NVIDIA, mostly because we continue to get rejected at about that 974 level. Now, don't get me wrong. It's entirely possible, it might even be entirely likely, that NVIDIA hits all-time new highs after their next earnings set. But that's not expected until May. So we've got about 2 months between then and now to really see where do we allocate between now and then. For some, it's just dollar cost average into your favorite names. For others, it might actually be an opportunity to raise a little bit of cash to be able to allocate more aggressively in the event we do get this sort of pullback. Now, something else that we're looking at is the following. Quote, Bloomberg today, despite today's University of Michigan data, tomorrow's PCE data brings asymmetric risks for a sell-off in stocks and bonds if tomorrow's readings on the Fed's preferred inflation gauge come in a bit hotter than expected. They're already expected to come in warm, so if we get even more warm, especially given that Mr. Waller today suggested, hey, we might have to slow down a little bit here, who knows if he's planting the seeds on something that he's kind of maybe already aware of. Who knows? The Federal Reserve has done funky things to manipulate our opinions in the past. But in the meantime, can I personally make the argument to bet against the U.S. economy? No, I think that's a very difficult argument to make. We are further in inversion right now, so it does suggest that there could be some pain coming at some point in the future. But really, we've been at this level of inversion since, oh wow, what a surprise, October of 2023. We had quite a steepening of the yield curve between July 19th as well and October. In fact, it's worth noting that in July, which might lead some people to say this time is different, in July, we were over 100 basis points inverted. And we ended in October at about 40 basis points inverted, which means we've really done a lot of uninverting in that crash that we sort of had, that 3-month sell-off between July, August, September, October, mostly the end of July, so it was slightly more than 3 months, right? So the question is, can we go substantially more inverted for this next sell-off, maybe get over to re-inversion, or sort of uninversion, rather, I should say. Who knows? But these are some of the things people are paying attention to. So if I'm an investor right now, I'm thinking to myself, do I raise cash? Do I trim a little bit? Maybe. Do I keep DCAing while things are at extreme greed? Or do I take a little pausey doodles and sort of just wait to see what happens? Is this a time in the market where it makes sense to sell everything and just sit on the sides because we're going to have a worse season than 2022? No, I don't think so at all. I don't think that's the right answer at all. But I do think there'll be a better buying opportunity if you are heavy in cash in the next 2 months, especially before those NVIDIA earnings between now and then. Who knows? It's also worth noting that Dan Ives did drop his deliveries forecast on Tesla to 425 this morning. So that's putting a little bit of pressure on the stock, along with Xiaomi releasing a vehicle purposefully undercutting the Tesla Model 3 in China by, $4,000. So there are some concerns that maybe, as Dan Ives said, who is a pretty much an ultra bull, there are some concerns that maybe, as he says, the perfect storm of demand issues has occurred, and we might end up having some of the dark days still ahead of us. You could read that full piece on Benzinga, which I've linked from eHack if you wanted to see that, on what Dan Ives thinks. And he's generally an ultra bull. He's got that $300 price target for Tesla, and that is down from $315. Now, other things you're seeing in terms of breadth expanding, it's worth noting that even companies like Disney, they've been having a great rally here. You're up about 1.21%. Nice rally up to that 125 fib. It's been straight up here. Again, this sort of expanding of who is getting all of the gains. It's no longer just NVIDIA. NVIDIA instead having a little bit of trouble the last few days to really try to actually keep it up. Same thing true for ARM, though ARM has been positive most of the day today. ARM now going negative. It'll be neat to see if we get a sell-off into the close. Yesterday we didn't. Yesterday we actually had a rally into the close, but today is the last day of the quarter, so it's that last day to really show everybody, hey, I got some gains, and maybe move a little to cash in case we do get a sell-off. Who knows, though? Anyway, these are some of my thoughts. Hopefully they're useful to you. We will make sure to get you a report on what happens with PCE tomorrow, and then we'll reanalyze. But watch that multivariate core. Watch what the Fed says, and folks, we'll see you in the next one. Thanks again. Make sure to go to meetkevin.com to check out the event, the courses, the stock alerts, the course member live streams, you name it. We've got a discount code ending Easter Sunday. Thanks again. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.